All right. Good morning, traders. Welcome back to Morning Kappa at 8. Aiman here. Okay. So, looking at the S&P 500, well, it declined slightly yesterday by almost 0.3%, led by weakness in the tech sector after the US Powell um, flagged that they stretch equity valuation. So, I think the drop was broad in a broad sector. Uh, we can see that energy and also, as well as the consumer sectors help to limit the losses. However, let's see whether this is a short correction or just a start to a broader pullback, especially if valuation get tested further. However, in terms of technical point of view, I think the index has kept its gains at 6,700 points, and we see that if the pullback goes deeper, nearer support should be at 6,500 points, right? So looking at our US trading stocks for today, that we have published overnight. So we showed MP materials, which is MP. So the stock has breakout above the $72 level. Well, if the bullish momentum to continue, we can expect the stock to travel towards the $80 level, followed by $88 level. So the support is back at $65 level. Next, we have Rocket Lab. So if you see here, the counter experience its follow through from the previous session momentum and jumping from the 21-day average line and break out above the immediate resistance at $50 level. Well, if the stock climb higher, we could see that it might propel or travel to towards the $57, followed by $64 level. Well, if the stocks slide below the $43 level, this might signals a shift in bearish structure. Okay, so looking at the China A50 A shares index futures, right? So it ticked higher yesterday, probably around 0.3%, 0.4%. Yesterday. So the gains was backed by broader rebound in Chinese tech names, and also, if I can recall, some easing trade tensions, right? Also, if you notice, the institutional buying in the market also uh, supports, right? So sentiment is positive, well, at this juncture. And if you can see the charts here, the index is moving in higher high patterns. Well, I believe it is now targeting around 15,500 points. So if you wanted to know further, right, tonight we have a webinar session at 8 p.m., 8 to 9 p.m. with G Tun, the CIO of RHB Asset Singapore, and also Joseph, discussing deeper on the China market. So let's tune in tonight. Right. So looking at the WTI crude oil futures, well, it moved higher recently. Well, I think supported by reports on higher draw of US crude stocks, as well as the tightening sentiment around the export from the Venezuela, right? Also, I think recently geopolitical risks on Russia energy supply also lend support, right? So from technical standpoint, I think triangle pattern has showed right here, the price is compressing, and I think it's about time for either a bullish or a bearish breakout, because this one is considered as bilateral pattern, right? So let's wait for the coming session to see the results. However, we still have a negative bias in our report unless it crosses above this 67 US dollar level, right? So coming back to Malaysia, looking at the local market, well, FKLI declined or slipped slightly into the red yesterday. likely reflecting the cautious sentiment as investors brace for the upcoming macro data. But also, if you notice, I mean, if you can remember, concerns over government's targeted fuel subsidy plan, coupled with the foreign outflows, may have dampened the so-called sentiment recently, right? So the pullback, I think, appears more like a risk-off adjustment rather than a full swing pullback, right? Uh, yeah, but do note that we still have a long recommendation eyeing for 16-20 points. Well, market structure at this juncture is nice or beautiful, forming a higher high structure, which is an uptrend, right? So, yeah, in terms of watch lists, this is our watch list. I think the yellow ones, the highlighted ones that I have highlighted, recorded positive gain, well, at least for the period of this week. Um, well, if you manage to follow, then congratulations. Next up, we have our Malaysia trading stocks. We have four stocks to recommend today. Firstly, it's iSense Group. Well, the stock today, the stock has tested I mean, it's on a pending breakout formation and testing its resistance at 46.5 cent level. With that, we expect the momentum to remain bullish and the stock able to climb higher towards the 49 cent, followed by the 52 cent level. If this stock able to clear or to reverse below the 43 cent support, this signals a further pullback. Next up, we have IGP REIT. So the stock on yesterday experienced a breakout where it breached above the resistance of 2.75 on the increasing volume, right? So should the bullish momentum to continue, the next resistance that we see is at 2.90, followed by 3 ringgit. Support is back at 2.65. Right. Thirdly, you have Powerwell. Now, the stock has triggered our screener yesterday. So the stock has break out above its resistance of 58.5 cent. Well, if this bullish momentum able to follow through, can expect the stock to propel higher towards the 62 cent level, followed by 64 cent level. Support is back at 55 cent level. So do watch out at this level of support for any attempt of reversal. Okay, so finally we have T-Field International for today. So the stock has break out above its 1 ringgit and 45 cent level, and we do anticipate the stock to climb towards 1 ringgit and 55 cent, followed by 1 ringgit and 65 cent level. Also, support is back at 1 ringgit and 30 cent level. Yeah, so I would like to highlight again, right? The additional stocks that we have shared recently during Morning Kappa on I think on Tuesday, which is the NE Northeast Group. So I would like to continue to reiterate on the NE again, as it managed to climb higher above the recommended resistance of 81 cent level. Now, if you all can watch, if you all can look closely, right, the stock is trying to propel towards the next resistance at 86 cent level based on this Fibonacci projection line. Fibonacci projection tools, right? However, if any pullback to happen, right, we, by the help of the Fibonacci retracement, do watch out somewhere around this blue arrow, which is the 50 to 61% Fibonacci level, which could be the pullback level, right? So yeah, together with that, we also have my news also continue to trend higher on its uptrend after we have highlighted this stock recently. So as mentioned, I think that the pullback may be completed, referring to the FIBO level right now, which is the golden ratio. So yeah, the stock is now eyeing at 69 cent level. We will keep continue to monitor this stock closely, and we'll follow up with you all on this again. We do this together, right? So looking at the FCPO, well, it rebounded yesterday, gaining back grounds after the earlier weakness on Wednesday, right? So the bullish push somewhere in yesterday's move, right, supported by the strength in the soy oil, also the firmer crude oil sentiment, and also, if I'm not mistaken, the renewed optimism in the expected export demand, especially from India, right? So I see that yesterday's move as a positive corrective bounce rather than a full reversal of a positive trend, right? So since FCPO has hit our stop loss in Wednesday, right, and we have shifted to a short recommendation, so we keep our short or negative trading bias unchanged, well, at least for now, right? So yeah, before I end the session, I think let's tune in for tonight's webinar with Jitun, the CIO of RHB Asset Singapore, together with Joseph, discussing about the China market rebound, right? So I'll stop here and pass the floor to the next presenter. Thanks and happy trading, everyone.
There's an increase in the inflation on year basis. So basically, these are some of the subgroups that actually are impacted by the expansion of the SSD effective in July 2025. So hence, we do see that there's some pass-through impact from the SSD broadening to consumers due to an increase in business costs in selected sectors, as what we actually expected earlier on. So the direct impact of the SSD expansion, however, on the CPI is estimated to remain manageable at around 0.1 to 0.2% on year basis on a full year basis. So, and then aside than that, some other factors that will actually drive the inflation for 2025, so which including reduction in raw 95 retail prices to RM1.99 per liter, so starting from end of September 2025. So based on our preliminary analysis, the 3% reductions of raw 95 retail prices might actually lower the annual inflation by around 0.1 to 0.2%. So however, with the implementation scheduled since started September this year, so the immediate impact for this year is actually expected to be around only 0.03 up to 0.04%. So we also remain watchful on some of the future developments of raw 95 subsidy retargeting, which we might anticipate to see more in the budget 2026 announcement by 10th of October. So although current raw 95 subsidy retargeting is implemented through a usage cap applicable to all income groups, so we still seeing that future refinements cannot be ruled out, which will have some impact on inflation as well. So fourth, impact from electricity tariff restructuring. So electricity tariff restructuring is expected to have some fluctuating impact on the inflation, as we see in the August print for now, because the tariffs are now adjusted monthly under the new implemented automatic fuel adjustment mechanism based on real-time fuel prices and forward projection. So for this round, some of the domestic users consuming over 600 kilowatt hours actually receive a rebate. So this actually contribute to a decline in the inflation for the electricity, gas, and other fuels subgroup for the month of August. So other factors, so which including softer demand pull pressures in this year, so due to cautious sentiment, and also fluctuation in the global commodity prices. So all of these factors, we think that will actually drive the inflation for the rest of 2025. So we still maintain our 2025 inflation forecast at 1.6%, so well within the official forecasted range of 1.5 to 2.3%. So domestic policy developments still point towards a continued benign inflation trajectory in the second half, where we projected the second half inflation to be at around 1.8%. So amid a moderate demand and also cost conditions. For the first 8 months of the year, so actually Malaysia headline inflation increased by 1.4%. So just give me a minute to actually share my slide, to actually share my screen on the budget report. Okay, so I hope you can see my screen. So basically for the upcoming budget, so we do seeing that we actually focus on 5 key aspects. So which including fiscal sustainability, so economic stimulus and infrastructure developments, social welfare and inclusivity, and also lastly, social welfare and inclusivity, and also strengthening the business and investment climate, and also advancing the ESG priorities. So for the fiscal sustainability, we think that let me reshare my screen, sorry. Sorry. Please let me reshare my screen. Okay, so for the fiscal sustainability, so we think that the fiscal deficit target for 2026 is likely to be set at around 3.5% of GDP, followed by a target of 3.2% of GDP for 2027, which is in line with the midterm deficit targets. So under the midterm fiscal framework, just to recap, the fiscal deficit is expected to consolidate further, with overall balance averaging at 3.5% for the period of 2025 to 2027. This also forms as a part of effort to reduce the fiscal deficit to below 3% of GDP by 2030. So for our upcoming budget, we do not see that there will be some major new tax measures or subsidy rationalization initiative, as some of the key reforms such as the expansion of SSD and the rationalization of diesel and raw subsidies have already been implemented or are on track for implementation. So instead, the emphasis will likely be on fine-tuning and refining the existing policies to ensure a smoother execution and maximize the fiscal impact. So some of the measures we might expect to see more clarity, including firstly, potential expansion of the SSD scope, and secondly, increase or adjustment on tax of unhealthy consumables. Thirdly, phase implementation of the carbon tax. Fourth, revised estimates of savings from raw and refined rationalization. And lastly, the updates of e-invoicing in Malaysia. So we do not rule out actually possibility of further revision of the SSD, particularly the service tax rate for selected sectors. So in this regard, we think that some of the sectors such as rate of food and beverages services, which we mean restaurants, for example, as well as telco services, the services tax rate might be raised to 8% from the current level of 6%. So, and then just to note that the recent SSD expansion, so on an annualized basis, it will be able to raise around 10 billion of additional government revenues, which we are likely to see the full impact by 2026. So beyond the expansion of the SSD, the adjustment of the SSD rates, so we do expect to see increase or adjustment in taxes on unhealthy goods, such as sugary drinks, tobacco, and alcohol, as part of the government's efforts to actually both discourage unhealthy consumption and also raise revenue. So under the 30 Malaysia MP, there's a proposal being made to expand the poor health taxation to include both tobacco and also alcohol, following the implementation of sugar tax in 2025. So thirdly, carbon tax is also likely to be on the radar for budget 2026, which they actually announced and also revealed in budget 2025 as well. So it might be initially targeting high emission and trade exposed sectors such as iron, steel, and energy industries. So fourth, we expect to see more clarity, possibly on subsidy savings and also potential new developments on the Malaysia Raw 95 rationalization program. Just to note that the recent Budi 95 targeted petrol subsidy, which effective on 30 September, so allowing all Malaysians, so regardless of the income level, so to purchase up to 300 litre of raw 95 per month at the new retail prices of RM1.99. So there's no mentions on the income group limit. So and then the subsidy rationalization is projected to save the officials by around 2.5 to 4 billion of subsidies annually, but which is lower than an initial projections of 8 billion, where the 8 billion estimate is actually including both foreigners and also higher those in higher income groups targeting was being targeted. So basically, we do not actually rule out there might be a further refinements of the Raw 95 subsidy retargeting in the future. So which might expect to see that there's more clarity in upcoming budget 2026. So fifth and last, so regarding the enhancement of tax administration and also compliance, so the full effects of e-invoicing system are extended on next year. So which likely roll out to be continued with business earning between 1 million and 5 million from 1st of January, before extending to smaller entities with a turnover of up to 1 million on 1st of July 2026. So on e-commerce stimulus and infrastructure development, so we expect around 86 to 89 billion to be allocated for development budget in budget 2026. So actually with some of the focus, such as improving the regional connectivity. So with the focus on the transport related infrastructure, and also major initiative to include continued works on Pan-Borneo Highway and Trans-Borneo Highway, upgrades to the Plus Expressway in Johor and Penang, and also the Central Spy Road spanning Pahang and Kelantan. So flood mitigation will also remain a priority. At the same time, with some allocations in develop the digital economy, including plans to expand the 5G coverage to 98% in populated and industrial area as well. So some other measures under social welfare and inclusivity, so including policies such as affordable housing schemes, subsidy programs for staple food items, subsidy and fair discount for low income group, as well as cost of living assistance are likely to be continued. For this round, we think that the cash assistance under SDR and also SARA are likely to see the higher allocation at around 16 to 17 billion in budget 2026 compared to allocation of 13 billion in budget 2025 due to the extra revenue and also savings generated from subsidy rationalization. So that's all from me. I'll pass the line to the next presenter. Thank you.
Okay, morning everyone. We are initiating coverage on farm price today with a buy call and 47-cent target price. To give an intro on the company, farm price is engaged primarily in the wholesale distribution of fresh vegetables. The company differentiates itself from competitors by offering a broad range of vegetables, while most competitors focus mainly only on a single category. And in addition, farm price is able to provide value-added services such as processing and packaging. And these convenient solutions are increasingly in demand from both HoReCa and consumers. As for the investment thesis, we like the company as a proxy to the growing national focus on food security. Malaysia National Agro-Food Policy 2.0, which sets out the structural initiatives to enhance self-sufficiency, modernize the food value chain, and strengthen regional supply resilience. We believe farm price focus on fresh produce distribution, supported by their expanded cold chain and logistic capacity, and cross-border sales into Singapore is positioned to benefit from this initiative through access to policy incentive, stable demand, and improved regional market penetration. Additionally, the upcoming capacity expansion, which is expected to be operational in FY26, should be a catalyst for farm price after their years of full utilization from existing capacity. We expect the additional capacity to be absorbed within 3 years, driven by market share gains in Malaysia and Singapore, alongside continued growth in the pre-packed and fresh cut vegetables. We also see more room for farm price to grow in Singapore. Farm price aims to grow their Singapore sales contribution from 50% in the longer term farm price aims to grow Singapore's sales contribution to 50% in the longer term from currently 28%, and this will be supported by their market share gain and the country reliance on fresh produce import. Additionally, we highlight that farm price role as a panel supplier to Compass Group Singapore, which is a leading institutional food service operator, is a testament to the company's quality and reliability. As our earnings forecast, we forecast a 3 years earnings CAGR of 14.7%, rising from 12 million ringgit in FY24 to 18.1 million ringgit in FY27. This is after we factor in volume growth and economies of scale due to the aforementioned catalysts. We derive our target price of 47 cents based on DCF valuation, which implies a 15.7 times FY26 PE. Our recommended valuation for farm price is at a slight premium to the 13 to 14 times range we ascribe to the small cap consumer discretionary stocks, but at a steep discount to the large cap consumer staple stocks under our coverage. We believe that this is justified as farm price products are essential items with a resilient demand profile similar to staples, and in addition, farm price earnings mix is shifting towards higher margin value-added services from pure wholesale distribution. So all in initiate coverage with a buy call and 47 cent target price. That's all for me. I'll pass to Siang.
Okay, thanks. Let me continue with a company update on VS Industry. This is also a results preview as the company is going to report its fourth quarter result on 30th September. So essentially, our previous forecast on expectation of a strong volume ramp up in fourth quarter may not play out this time, considering the uncertainties on the US tariff during the quarter before the final decision on 1st August. So this should have led to a drop in volume of production throughput as close to 60% of VS's sales go to US as customers opt to take a wait-and-see approach and defer their shipments. This sales weakness will also translate to a sharp margin erosion on negative operating leverage given the high fixed cost nature of the EMS business. And as such, we estimate fourth quarter core net profit to come in at below 5 million level. In addition, we highlight fourth quarter always sees material adjustment or impairments, and this time around, it could be more unpredictable given after the change of VS's auditor after more than 30 years with the previous auditor. Essentially, we believe the reason share sell down has more than priced in the forthcoming result disappointment. In fact, our checks with management suggest no loss of key customers or major change to business fundamentals. Instead, we gather that volumes are picking up very nicely, spurred by favorable year-end seasonality and new product launches by some of its key customers. On the other hand, I think they will stand a good chance of securing more new customers as increasingly more brand owners are looking to diversify their manufacturing sources in reaction to the US tariff move. Meanwhile, on Philippines, the startup is progressing well. The productivity level is trending on par, and this is initially their biggest concern or the biggest execution risk. And more parts are being produced in-house progressively to lift the overall efficiency level of the Philippine operations. We take the opportunity to bake in more conservative volume assumption to reflect the tariff impact on consumer demand, and we also assume a lower gross margin on lower utilization rates and higher difficulty to pass on costs. And as a result, our earnings forecasts are revised down by between 18% to 39%. We also trim our target price to 78 cents based on a lower 15 times PE from 17 times to take into account the risk of slowing demand from the global trade tension. Even having said that, we think current valuation is depressed with the stock trading at below mean, and this has definitely undervalued VS industry. Essentially, the investment merits are still pretty much intact, i.e. the market share gain with customer X, and the opportunities, the new opportunities from trade war are emerging. And in the longer run, we believe Malaysia players could benefit from sustainable job flows given the tariff differential against China. So all in, we maintain our buy call with lower target price of 78 cents on VS. Thank you. Thank you. And I will pass on to the next speaker, Vanessa. Thanks.
Thank you, Yee Sian. Hi, good morning, everyone. This is Vanessa from Warrant's team. Okay, so I'll be sharing on EcoShop call warrant, as yesterday we actually see very high volume traded in EcoShop shares and also 99 Speedmart and a few of them. All right, so yesterday one of the highest traded price for ECOSHOP-CR was 7.5 cents. So it actually recorded a 36.4% from the day before. So it means one day it actually went up by 36%. All right, so it's actually always hard for new investors to start investing in call warrants or put warrants because definitely it is a more sophisticated product, but then it actually requires some understanding for you to kickstart your warrant trading journey. All right, so this screen is actually a screen from the RHB Warrant website. So it's telling you what is this warrant about, the information and also the specifications of this warrant. All right, so now you are very bullish on Eco, and then it actually went up for quite a bit. And then you actually noted that on your screen, there's so many EcoShop call warrants and you don't know which to choose. Are you going to choose the one with the highest traded volume, or you want to choose the one with the highest percentage gain, or you want to choose with the lowest price? So you're always like, unsure which to choose. So now I can actually share a bit of how do we actually choose a warrant. So first thing, you have to identify a breakout price. With this, right, I want to share with you like how do you actually identify a breakout price. I'm pretty sure that you're all very, very pro already. Then you can I usually like to use RHB TradeSmart because for the screen of advanced charting, for example, EcoShop, I can actually read all the commentary, and then I know that before this it was 1 ringgit, it was 1 ringgit and 37 cents, and then after that actually the resistance changed to 1 ringgit and 39 cents increase. But then still for EcoShop, mother share actually broke the resistance of 1 ringgit and 39 cents. So with this, now you go to the warrant website. After you have chosen, you think that EcoShop-CR is okay, then you can actually use this to see what price you want to enter. All right, so 1 ringgit and 39 cents is after breakout, then it's like about 6 cents. You can actually place an order at 6 cents or maybe 6.5 cents after you want to confirm on the breakout. Okay, so this is how we actually identify the breakout price. And secondly, you can actually find a good warrant. So good warrant are usually with lesser ticks of sensitivity and also higher effective gearing. So this is the one that I want to share with you on how do we actually look at it. So you still go back to the warrant website. Okay, so the warrant website is going to show you on how to choose it. Under the warrant search function, you put in EcoShop, all issuers, and then you put the filter in. So this is actually how I look at it. You can actually use this function to see the warrants with lower sensitivity, like less ticks. I mean, better sensitivity with lesser ticks. So 6 ticks means very slow. 1.8 ticks means very fast. So at the same time, you want it to be fast and also give you high gearing. High gearing means 1% movement is going to give you X times of gain as well. Like for example, 5.4 times means 1% move in EcoShop, and then you will get 5.4% approximately in EcoShop-CF. So what we want is like less ticks and high gearing. So with this, of course, I would like to introduce you ECOSHOP-CR by RHB, that the responsiveness is only about 1.8 to 2 ticks. But then because the absolute price is very low, it's like about 7 cents, right? Then 1 ticks movement is going to give you better return. In this case, it's 5.9 times on the effective gearing. So with this, you will be able to see which will be the best for you. So after you have ended up with ECOSHOP-CR by RHB, so you go back to what I shared with you just now. The tactic is that you identify the breakout price and then you can put your order on RHB TradeSmart. Okay, so we actually works together. So your RHB TradeSmart screen and also RHB World website screen, they will be they are meant to be used together, so you can identify your enter and exit price. All right, so with this, not only I would say not only ECOSHOP-CR, ECOSHOP is it was published yesterday. So I would like to bring your attention to Binastra as well. So Binastra Mothershare and Binastra CA. So Binastra CA is actually the one and only Binastra call warrant currently in the market. So if you want to have a leverage exposure on Binastra share, right, you have only one choice, which is Binastra CA. Anyhow, Binastra CA, we actually price it nicely as well. It has a decent sensitivity, I would say quite fast lah. So have to be extra cautious when you trade on it, because if the share price goes down, right, it will actually move very fast as well. At the same time, it's giving all of us an effective gearing of 3.6 times. So you see yesterday, Binastra actually went up by about 1.4% to 2%. But Binastra CA actually gained about 12%, 12.5%. All right. So upon issuance, 2 weeks ago, right, the Binastra was actually issued at 8 cents only. So from 8 cents to 18 cents, it's actually it's more than 100% gain, I would say. So this is actually the power of leveraging. But do note that if it actually the share price actually came down, then it will be a double-edged sword as well. So you might actually experiencing some losses in that case. So it's really important for you to know when to actually enter and also exit your position. All right. So besides from Binastra, another one I would introduce to you would be CTOS C20. So CTOS, I would say even though the year-to-date performance for CTOS is not as impressive, but for warrants, that's one thing that you need to take note, is that warrants are actually a short-term trading instrument. So with this, it's actually good for our clients who actually trade shorter term and monitor the market closely. So with this, a slight rebound or maybe some rebound in the mother share could actually give you a good, quite a rewarding return. However, you have to be really careful when trade on all these stocks that actually move very quickly. So CTOS C20, yeah, so if we look at the chart, right, the chart actually actually showed you the performance of the warrant and in accordance to the moving of the share price. So from 90 cents became 1 again 1. The warrant gained from 3 cents to 5.5 cents. So it sounds very good to be true, but it actually happened because of the gearing of this warrant. But however, if you are actually entering at the very high price, 5.5 cents, yesterday actually closed at 5 cents. So in this case, that is actually losses of 10%. All right. So with this, but if you still have a bullish a bullish view on CTOS, maybe for a few days, then you can actually look at CTOS C20. With the sensitivity of 3 ticks, the effective gearing is about 6 times. So 1% move in CTOS is going to give you around like 6% positive gain. It goes up. Okay. But for this one, for this effective gearing and also sensitivity, it will be translated from all these price matrix. And also another additional note that I would like to bring your attention to is that since CTOS is just broke 1 ringgit, right? So if you know that the tick size for the securities or all these shares, warrants, if they are below 1 ringgit, the tick size would be 0.5 cent. But if it's above, it's 1 ringgit and above, it became 1 cent. With this, you actually can tell that it's very straightforward from the view of price metrics. You will actually see that 1 ringgit above, right? It became more sensitive because tick size is 1 cent, right? So it moved very fast. But then if it drops below 1 ringgit, 99.5, 99, 98.5, it actually went back to 0.5 cent. So in this case, I can actually say that there is actually more cushion at the downside compared to upside. Upside is very fast. That means that 2 ticks, 3 ticks, you will see the price to go up. But then if it comes down, right, it's actually quite a good cushioning. So you know that you have time to run away. So in the case of like CTOS dropped to 98 cents and you think that it's breaking its support level, then you can actually exit at 5 cents. So this is how we actually use the price metrics, and also you get more familiar. You can actually get familiarized with all these metrics and also the warrant specifications for you to choose the best warrant. Right. So with this, I'll end our RHB Morning Kappa at 8 session. So thank you so much for listening, and we hope that you have a great trading day. So we'll see you tomorrow at the same time. Thank you.